what you could have missed overnight, Wednesday night, was a blocked tariff. The widespread tariffs that has been Trump's favored trade strategy begs the question, will tariffs be blocked indefinitely? And how could this shake out for the U.S. dollar? Because, man, there are a ton of ways this could go. As we know already from all of this tariff shakeout, a lot of factors at play. Not really the winners and the losers that you would expect from any of this, but what actually happened. We had a U.S. court, the Court of International Trade. It sounded like, when I first read the headline, it sounded like it wasn't a U.S.
court. Yes,
it wasn't a U.S.
That's what
court.
I thought too.
But it turns out it was, and their main point of contention was the executive power that Trump invoked to put on all these Liberation Day trades or tariffs on April 4th, the widespread tariffs to many countries, many regions. That was an unjust use of power. I think it goes back to some 1970s act or law that he tried to invoke. They're saying, no, papa, and that they have 10 days to remove these tariffs. And here we have on the right, in blue, is everything that would be struck down by this court order. And the stuff in red, things from his first administration and things prior that went through the correct channels, still in place. So steel, aluminum, solar, a lot of China products. But a lot of these new, the 30% tariffs on China, the 25% on Canada and Mexico, and the 10%
So the random, I'm just pulling a number out, and then I'm going to change it and either jack it up if I'm having a bad day or lower it on a good. That supposedly is out of place. But the ability to target a little bit more specifically a sector still remains in place.
Yeah, I think everything.
So why doesn't the pivot become, I'm going to ignore you and I'm just going to pick the 50 largest goods that probably, if you make the bucket big enough, meet the 7.7 of the 7.9 billion for China and Hong Kong, and implement those.
Yeah, I think it's twofold. I think there is kind of a maximum tariff. I think over 15%. There's some precedent for that being less above board, and then going through the correct channels. Not just saying slapping it on a country ad hoc. So we'll see how this. I'm no legal expert. They'll all settle it. But what we do know is that uncertainty hasn't been good for this U.S. dollar. A lot of things could happen here. The decision could get overturned. The White House has already begun the appeal process. That could make it all the way up to the Supreme Court. Which could be the base case here during this appeal is it looks like no tariffs or that these would be struck down until reapproved. And so maybe you say, regardless of how this appellate process, as long as it takes a long time, we have a reprieve. Is that fair to say? I mean, we saw off this a big jump in the dollar, a big jump in equities. Everything else except the dollar, has that been sustained overnight? Equity moves?
Pretty much. Equities are giving back a little bit now. Bonds unfazed by it, and currencies on both sides. Gold getting bid, silver getting bid. But again, we had appreciable sell-offs at the end of the day. This is, again, from the mechanical standpoint, I don't know how they could impose these tariffs and actually start collecting the money so fast.
That's what I was.
Do these huge container ships go through like a toll booth and they're scanned, and then there's a receipt that comes out, or you have the iPass up there and
I'm thinking it's an iPass. I think
it's just the whole concept of just start collecting all these right away.
Yeah.
And I don't get, so let alone who is going to be told down the chain, stop collecting
Well, now you really I think you nailed who the biggest loser of this is. Is anyone that's paid
building an iPass for a cargo ship. Yes, you are now in danger of your play.
And anyone that's paid already. I mean, getting money back from the government.
Good
through
luck.
This. Yeah. Definitely going to take some time. So anyone that was able to.
There's a few people left in government. I doubt that phone call will go answered.
Exactly. A lot of rings. So it'll be interesting to watch for sure. But this dollar reaction, very interesting. We saw a huge lift led by the Japanese yen, the Swiss franc primarily, and then overnight really taking all of that out. As you know, this story isn't exactly settled. What do you make of this just price action in this dollar yen?
Spot on is the fact that the yen and Swiss move means, as much as we say they're not the risk off tools they used to be, they still have a little bit of that in them. And the fact that yen and Swiss were the earlier moves said that the risk piece got baked out a little bit out of it.
But it's interesting it goes from that end because you have that end of traditional risk off currencies, and then you have some risk on currencies, and we didn't necessarily see a bid tone for like a Canadian dollar or an Australian dollar. Is that because
very different movements in Aussie and Kiwi? I think it speaks to that this is just muddled. More confusion.
And also that in recent weeks, as opposed to the beginning of this whole tariff ordeal, we've seen a lot more synchronous dollar moves.
Yes.
And so now I suppose if there's a play in risk on versus off, it's going to be in the risk on in terms of in favor of the U.S. dollar as opposed to, kind of the handcuffs we were putting on the Australian dollar and the Canadian dollar earlier.
Now, I mean, and this move, roughly 6 or 7 o'clock our time in Chicago, the Australians are quoting FX, New Zealanders are, the full suite of people. And again, everybody quotes all around the clock, but the full suite of everybody in Asia is not necessarily into their trading day yet. Thinner part of the market, we get a good 140 pip move in yen. But the takeaway here is, and we're starting to talk about it, these tariff-driven algo moves. Well, if I was short looking for a trade, looking for the 140 trade, this really hurt, came out of nowhere. But it took them a matter of 8 hours to mark it all back out. That's opportunistic for us as traders. So I think what this really speaks to is the tape-driven algos that react to this at thin conditions took this, again, risk off, more certainty. They moved the market quickly. We're not reading that news and trying, we're going to try to jump in and buy some of this. They will put the market to a point, and then forces will interact with it. And you can see that it took a little bit of time, but this was all marked out of it. Those are opportunities that are, I think it speaks to, net, what does this mean? Nothing.
And that, I think, an important takeaway from this story as well could be that that Trump could explore other methods, trying to work his way around, because I can't imagine he's all too pleased with unelected judges blocking his trade strategies. And so if you have that line of thinking of, these actual nothing announcements or uncertain over the long term will continue to spark some expanded ranges over such a short time period, then you're definitely keeping an eye on, his developments, what he publicly says he'll explore next, because you could see a similar reaction there.
Yeah, and I think there's a couple of takeaways longer term here, and we go through the other markets, we'll see. The impact of this is becoming much more muted than it used to be, which means that now we're starting to stick. Yeah, we ran 130 pips. I got to imagine one standard deviation 30 days in. It's probably closer to 82 than was it 100. Let's say 85. It outran that a little bit, but not by much.
Right.
So that actually would have been, if you base it, okay, the market's up 85, 90 points, you would have been a little early selling 145 80s or 90s, and you would have taken a little heat on them, but not much, and the market would have worked for you.
Yeah, and zooming out a little bit, wanted to look at this U.S. dollar Canadian dollar pair, because that's, fundamentally where your mind goes to in this story. They were kind of the leader. This pair was the lead to watch when all the tariff shakeout began. I mean, we're looking right here at February. That gigantic move was the imposition of tariffs on Canada, the subsequent delay.
Right.
But then you zoom out, and now we're looking at a 4% move in the Canadian dollar's favor year to date. What can we take away from this? That at this point, I can't even say that 10% reprieve for Canada's trade with us. I don't think that would be as impactful as all of our tariffs, all of those on our side getting revoked. I can't imagine that our U.S. growth prospects could be higher, and that bolster the U.S. dollar against the Canadian dollar, because it appears that Canada's been one of the ones to kind of play nicely and have things work out in their favor. If they hadn't, this could be a much different chart. They could have been the China, and who knows if the Canadian dollar and the Canadian economy could have withstood 50%, 30% tariffs. What do we make of this chart and Canada's prospects overall?
I think this was, if we were back at 140, we would have had a much more, 145 or 144, we would have had that raid between March and April.
Gotcha.
We would have had probably a much more reflexive down move.
Right.
But we have kind of normalized now a little bit, and we got the down move, and then, we're back below 140. We're still at the upper end of, I don't know, normal is the right word, but of a longer term range.
Mm-hmm.
So, I think stuff like this becomes less and less impactful. The market put in its high, gave back some ground, settled in on that range, tested another leg lower on the delay, and now we're almost detached from this. What Canada's doing to create other trade relationships, to take the fact that the partnership and the elegance of working closely with a neighbor may not exist. So like anybody practical other person, they're not going to sit there and wait.
Right.
They're going to look at, okay, this isn't ideal, but where else can we go and do business? So I think this continues to have a diminished effect on the Canadian dollar. I think the idea that the lack of credibility of U.S. policy will continue to weigh on the dollar.
Interesting.
So sterling was the outlier here of, so I'm still 134 bid, and I'll take them all. There's not a lot. I think the bigger picture to get away from the trade noise is, for better or worse, the dollar is not necessarily viewed as
rock steady,
as consistent a proxy for, again, it will still be used as a source of transactional and pricing and everything, but the long-term effects, I think, just speak to the unstable nature of, you and I love tape action. We want movement, especially movement that isn't all one way and
right.
base ripping. For the most part, the users of FX want a nice, stable marketplace.
Exactly.
This creates difficulty in terms of building, selling, and pricing product because you have so much uncertainty, and that creates difficulty in planning and deploying capital. So I think if the U.S. is a difficult place to do that in, or work with them to deliver your products into, where's a more stable environment?
Agreed.